We're here in Monte Carlo for the Rendezvous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Henning Ludolphs, who's Managing Director for Retrocession and Capital Markets at Hannover Re. Henning, good to see you again.
Good to see you.
So last year, a number of people said that it was the most important Monte Carlo in history. How's that interpretation played out?
I remember that it was a pretty good Monte Carlo, but I think it goes a bit too far to say this was the best ever in history. Looking backwards, the last 20 plus years I've been here, we had quite a number of exciting Monte Carlos, not all of them. So I think it goes too far to say that was the best in history, but definitely it was a good one.
So with your role in particularly looking at retrocession, what are the conditions that you're looking at the moment?
Of course, how is the market going? We look at it from both sides, the incoming and the outgoing business, and what is capacity for retro business. These are the points which we here are discussing with our partners.
So in general, how well set up is the reinsurance industry at the moment to provide the solutions that the clients are looking for?
I would say are in a good shape. There are quite a lot of developments and new offerings and new concepts offered to the clients. But surely, first of all, there's always room for doing things better. And secondly, the business is evolving as well. So there will be new challenges coming. And I think overall, I would see the reinsurance industry in a good shape to cover with these challenges.
So Hannover Re has always been at the forefront of using and sponsoring cat bonds. As reinsurers look to move away from those high frequency layers, are they encroaching on the ILS territory?
I'm not that close to the actual programs, but I've heard that retentions have gone up. I personally don't see the cat bonds really playing that well in this, let's say, the lower programs. I see them more in the middle of the programs or higher up. Maybe there's the one or other odd case. So I don't think cat bonds are the right tool for replacing parts which are now where retentions have gone up. But there are other tools, for example, structured reinsurance to balance situations over a couple of years, or maybe parametric ideas, taking out certain risk components. So there are other ways bridging the needs from the client to the reinsurer.
And from a capital markets perspective, what's the interpretation of investors of the insurance and reinsurance sector in particular at the moment?
On the cat bond side, the interest is fairly high because catastrophe bonds have done very well. One could argue there's a little bit luck involved in this because had one of the hurricanes gone through Miami, situations may have been different. But we understand there is a lot of interest in the catastrophe bonds. But I'm positive overall that ILS will further grow. And this is for the catastrophe bond side, but also for the collateralized reinsurance side. And the main interest, of course, which is the overall theme for ILS anyway, it's to a certain degree uncorrelated to financial markets. And yes, there are some ILS investors in for opportunistic reasons, but the majority want to have an asset class which does not produce losses simply because interest rates go up or down.
And there's a sense that investors are more familiar with the reinsurance and the ILS markets at the moment.
I think over the last 10, 15 years or longer, ILS investors have always been familiar. There's not a naive capacity. There are maybe also on the reinsurance side, the one or other who has come in new. But overall, this is a high professional capacity and expertise with the ILS investors, no doubt.
And that's possibly why we haven't seen a range of new startups that we might expect to see in a hard market cycle.
Do you refer to ILS startups or to...
Well, I was thinking more specifically reinsurance startups, but ILS startups as well.
The last 10 to 15 years, I don't think we have seen many reinsurance startups. And I think the reason is simply the money comes in via ILS. So the money comes in, but ILS is easier. And if you set up a company, you have to have the finance, you have to have the expertise, and you can't take out the money that quickly. If you come in via ILS, you can in quickly, and potentially get out quickly. So ILS is almost easier to get in. This is why I think we haven't seen the startups.
So there's been a sense over the past few years of ILS and traditional reinsurance working in partnership rather than as competition. As people move up, as reinsurers move further up that layer, are we expecting perhaps to see the competition returning between the two?
I always have seen both it's in cooperation and in competition. I would phrase the thing slightly differently. Is ILS, from the reinsurer's perspective, more a friend or more a foe? And clearly the Hannover Re view is, and my view is, it's clearly a friend. And I think the industry needs ILS to help to shoulder the larger exposures in the world which we have to deal with.
Henning, thank you very much indeed for joining us. Always a pleasure to talk to you.
Thank you.
For AM Best TV, I'm Richard Banks.